Is it time for the return of the value stock? We're going to talk about that. We're going to talk about sector rotation because rotation, as we've been talking about for a while, has been going on. We're going to take a little bit of a look at the name index, ICI money market funds, as well as smart versus dumb money this morning, as well as we'll be looking at some crypto. But before we get going, check out the channel memberships. You get your most bang for your buck, and that's the lag might level, where you get the real-time trade posts and members only videos. There's also Soda Straw, where we get the badges, you get the emojis, early access to the videos where they are processing up to HD, so you get about a 20-minute head start on everybody else. Also Stalactite, where you get that, plus member shoutouts on all that. But of course, Stalagmite is where you get that insight into what I'm doing, when I'm doing it, why I am doing it. We're doing some pretty amazing things in there. All right, so let's get right into this. We've got some new stuff going on the channel now. I've started doing these Apeonomics videos here, the shorts. They're just like 15-second shorts about silly things ape traders tend to do. I've been having some fun making those. Let me know what you think about those. Should I keep making them? Should I stop making them? Are you tired of seeing those already? I mean, I've only done two. Maybe you're already sick of it. Maybe you want to see some more of them, see what else I come up with on there. Anyways, let's get into the main part of the video. We're going to start with the economic calendar here today. So today we've got ADP employment came out today. That's a bit lower than actually kind of a lot lower than expected actually. We're looking at almost 30% lower, not quite 30, it's more like 25-26% lower than expected. So that's not great, but that does push us towards the idea of a Fed rate cut, even more so in September. Initial jobless claims came out slightly above target, so greater unemployment than expected. So that is also going to influence the Fed here in the next 2 weeks. 2 weeks from now, they've got that rate cut, and I'm not so sure it's going to be just a 0.25. They might do a 0.5 here at this point. It seems though they're pointing towards that sort of a scenario right now. U.S. productivity is up, so I don't know if that's AI related or not, but exciting. Our trade deficit came in a little higher than expected. All right, and we're also looking for services PMI and ISM services. All right. ICI came in. We are at $7.2 trillion of money sitting on the sidelines. When that does come back, it's not going to be all of it. Obviously, it's not going to be all of it. It'll be some of it. Maybe, even a few $100 billion can juice the market pretty good. So there's plenty of money on the sidelines to be coming in. People have been anticipating, and institutions have been anticipating a drop for such a long time that they've just been sitting in treasuries. And this is why I think we'll see a rotation to value stocks, because as those treasuries return less and less and less and become less attractive to own, they're going to shift over towards dividend and value plays, right? Especially if a lot of these dividend aristocrats are paying more than a U.S. Treasury. We could be seeing that shift into that, and that means we're looking at financials, big banks. We're looking at plays like Pepsi. We're looking at those sorts of things, and we'll do a quick analysis of that before we go here. Take a look at names. So we got the name exposure right now. So a week ago or 2 weeks ago now, we were at 98. Then last week we were down to 92, so it started coming down. And we're looking at, for that September seasonality, I want to see it come down maybe to like the high 70s, maybe low 70s, so high to low 70s. I'm looking for something like that. It might dip just below the moving average for a couple weeks, kind of like it did back here into the end of July, and then pop right back up there for October. So this is normal. Watching this pretty close. It's not that big of a deal. Smart versus dumb money confidence. Let's take a look at that as well. I don't want all of it. I just want like 5 years. There we go. Oh, look at that. Smart and dumb money are both getting confident now. Look at that. They're moving in lockstep, in tandem up there. So that's not bad. Not too bad. I'd like to see smart money go higher. Let me get like a year to date. Yeah, right there. This was like April to May. So this is like the lows. Like smart money was March, April, very confident as things were dumping. And then on the recovery, they started getting less confident, and Yeah, so this is smart money popping up isn't necessarily a good thing because they were most confident when things were terrible, but of course that was the good time to be confident. So they were just getting confident at that time. So we'll be watching for that as well. Yeah, sector rotations. We're looking here on the sector tracker. So this is the last 5 days. You can see communication services have been the only green thing on the map for the last 5 days, and significantly so. Healthcare barely hanging in there at almost, not there, almost at zero. Technology down 1%, utilities down 1.7%, which is interesting considering utilities are going to be super important for AI, water and electricity. Last month, communications, consumer discretionary, those two things were up, which I wouldn't expect to see consumer discretionary up in a rotation towards value, but healthcare, yes. Financials, yes. Energy to a certain extent, materials more or less. I'd be looking more for the staples, consumer staples. Once you see consumer staples really coming through, then you'll know that we're in a bad time. That means that the dollar stores are going to be the best investment of the year at that point. But healthcare up 4% in the last month, pretty exciting there. So let's look at how's the SPY doing here on this. So let me turn off some drawings. All right, SPY. Not too bad. Not too bad. It's holding up. It looks like it's going flat. We might get a consolidation, maybe some sort of dip to like 600 at some point in the near future, which wouldn't even be that big of a dip from where we are right now. 643 to 600 it's not even 7%. It's like a normal pullback. So that would be interesting to see if that happens in September. Maybe it doesn't. Maybe we wait until next spring for that. We'll see what's going on here, because this dip over here was huge, and even that I think was just within normal levels. Let's bring it down. Yeah, it was a 21%, so like barely to the area where it would be considered a bear market, and then it recovered right away. So let's take a look at, so I was talking about things like value, right? Like XLV, we're talking about healthcare. That's going to be a value, a lot of value play, and you can see, so I tracked it on the way down here. Watch, I wonder if I left that on there, if I deleted it. I did. So I tracked it on the way down here, and I knew when this popped up, we were going to get something special. And now it is consolidating here in a flag. And when that flag breaks, we could see this, push up towards that 146, maybe even 150 level out of this little move here. That'll be pretty exciting. And if we do XLV divided by SPY, we get, oh, look at that, healthcare trying to outperform the S&P 500 since August 13th. Look at that. That's exciting. Now let's do something like a value play. Pepsi divided by SPY. Again, also starting to outperform a little bit. It's got it's on an uptrend compared to the S&P 500. Let's take a look at like Coke. Not on an uptrend versus the S&P 500. So Pepsi's a little bit of the better value play there. Let's take a look at one like real estate. Let's take a look at real estate. So let's do like Realty. REITs. So they're going flat compared to the S&P 500, but look at that. Last time that happened was in February 2025, and look what happened after it stopped being flat. It popped off dramatically for about a month, and then it started cratering once more. So that's something I'm looking at. Real estate could do very well off of a Fed rate cut, or as those rate cuts start coming through really nicely. What about Goldman? I don't know their ticker. Hold on. GS. All right. GS. All right. Let me bring that in. GS divided by SPY. Financials. Oh, wow. Financials have been doing better than the S&P all the way since November 2023. Look at that. That is wild. Wild. Just for funsies, let's do Bitcoin. Bitcoin's not value, but yeah, look at that. Yeah, it's been outdoing the SPY since December 2022. So if you've been in Bitcoin, you've been wildly outperforming the SPY for a while. What else do we want to do? Let's see, XLP. That should be staples divided by SPY. Those are on the downtrend. When these start, when XLP starts outdoing, and if we'll go back here, XLP is the staples. When that starts outperforming SPY, something is awry. All right, something is going bad when that occurs. Yeah. So that's what we're watching right now. Kind of watching a lot of those. Is there another really good dividend pair that I'm aware of that I'd like? Well, let's look here. This will be a good one. SCHD divided by SPY. How's it been performing? We got a little Head and Shoulders down here on SCHD compared to SPY. So SCHD, which has been underperforming the SPY for quite a while now. It got so frustrating. I actually closed my position. I had quite a lot of SCHD for a long time, because it was doing very, very well, and then it started doing very poorly over like a year. And you can see that in January 2023, it started underperforming the SPY dramatically. It might be time where the SCHD starts to outperform SPY going forward, because SCHD is made up of, it's a dividend fund. It's Schwab's dividend fund. It's kind of like, what's the other one? That's a dividend fund that people like. I can't remember what it's called. SCHD was my preferred one, though. Anyways, yeah, it's starting to do well here, going up, charging up. Yeah, it could come break this high here, possibly push up even more so as we go, and make new all-time highs on this one, because it's been quite a while since we've seen that. Let's see here. I want like a one. I don't know how I ended up on a 2-day. But anyways, you can see here, yeah, since November 2024, we're coming down. Yeah, it's been largely flat, honestly, largely flat since 2021. So it might be time for those value stocks to start charging up along this line here, go higher and higher and higher. We'll see, though. I've got my picks, and if you're in Stalagmite, you'll know when I pull the trigger on those. I'm watching Pepsi again. I'm watching some other things, like I'm watching UNH, a lot of stuff like that. Anyways, I think that's all I've got for you today. Please like, comment, subscribe, share this video. Check out the Trade Cave store, link in the description, as well as the channel bio. Check out the channel memberships. Get some great stuff going on in Stalagmite there, and have a profitable day.